So we're going to make a start today. It's just gone 10 o'clock. Very welcome to all of you who have joined this webinar session today. I'm delighted to welcome you to this, our first Chamber webinar. The session is aimed at connecting your concerns into one succinct web-based solution to help you deal with the difficult situation that we find ourselves in and to help you into recovery as soon as possible. I'd like to start by introducing us. On your screens, you'll see myself, Heather Myers. I am the CEO of South Wales Chamber of Commerce. Joining me is Paul Slevin, who is the Chamber President and Chair of the Board of Directors of the Chamber of Commerce. Damian Phillips is a partner at Darwin Gray and will present the most up-to-date information on furloughing employees. Liz Maher is the Director at Centurion VAT and will answer questions: what is VAT deferral and where are cash flow savings to be found? And Harri Lloyd Davies is a partner at Bevan Buckland Chartered Accountants and will give us the latest grant support available, including CBILS. So as a chamber, we are here to help your business. That's what we do. And that's why today and over coming weeks, we have moved our events into a free webinar platform. There is an overload of information and confusion about what our businesses need to do, and we aim to cut through the noise with clear advice from industry experts. So we'll be bringing you a series of free webinars on matters that you need the answers to, so you'll be literally be able to watch this space. On to today, I shall hand over to Paul, who will take us through how the session is going to work.
Thank you, Heather, and good morning, everyone. Thank you for joining us, as Heather has said. Just wanted to explain briefly how this is going to work. So we've got three panelists who will share their expert knowledge with you. One important factor here, of course, is that the information changes on an hourly basis. So at some stage, you may wish to just talk to any of these experts about the latest information, because by Monday some of this information may have changed. I know that Heather will reinforce that at the end. And also, more importantly, this is not formal advice. So if you are seeking formal advice, please feel free to contact any of our experts, Damian, Harri or Liz, and they'll be able to support and help you. Many people have submitted questions already, which is good. Thank you very much indeed. Because of the scale of the attendees on this, we have taken the decision that verbal questions can't be accommodated because it would be fairly difficult to try and moderate. So on that basis, at the bottom of your screen, you will see a Q&A button. Please feel free to press that and enter your question onto that from your keyboard, and we will get around to answer as many questions as we can. So between the questions that you post and the questions that you have already submitted to us, it looks like we've got a good debate. So on that basis, we'll get going. Please remember that you've got social media information available to you too on Twitter and LinkedIn. Please feel free to post and tell us your feedback. My understanding is that the information contained in the slides will be available to you at the end, and we can circulate that as required if you send us an email to that effect. And my understanding also is that we are now recording this, so you will be able to have access to that. But all of that will be refreshed at the end when Heather bids farewell to you all. So can I now ask Damian to give us your insight, please?
Good morning, everybody. Welcome to this webinar, this new world that we're all now operating in. I'm going to talk to you today briefly about the coronavirus job retention scheme. The government has issued some guidance, but I've got to say it is still pretty vague. So a lot of employment lawyers have done their best to interpret it. Furloughing, a word that none of us had sort of heard of until about 2 weeks ago. It's an American term, and basically it means suspending an employee without pay when there is insufficient work for them. It's affectionately become known as the F word amongst employment lawyers. Essentially, it applies to all employers across the UK with a PAYE scheme and a UK bank account. And it applies to any employee who is on the payroll at the 28th of February 2020. Employee is quite a wide definition, so that can be full-time, part-time, agency workers, 0-hour contract workers as well. So it's not just somebody who has a contract of employment and is strictly an employee. And essentially, where the employer is furloughed because of coronavirus, HMRC will reimburse the employer for up to 80% of those gross wages, subject to a cap of £2,500. Now, that £2,500 is exclusive of employers' pension contributions and national insurance. So they will be paid on top. Only pension contributions that are statutory. So if you pay enhanced pension contributions, then they wouldn't be payable. The scheme is not means tested, so it will apply to any employer. And we've seen a lot in the press in the last few days about Premier League football clubs, for example, who clearly can afford to pay all their staff because they're paying their footballers, but are choosing to furlough some of their non-playing staff. And furlough leave has to be taken in blocks of 3 weeks. Excuse me. It's going to be 3 weeks at a time, and during those 3 weeks, an employee is not allowed to do any work whatsoever for you, not even a single hour. Another point to note that is, if you receive any sort of grant, public funding to pay employees, then you are not going to be allowed to use the furlough scheme. The government doesn't expect public sector organisations to apply for it. A, because they anticipate that most of those employees will still be required to carry out essential duties, but also by the very nature of the fact that they're already receiving public funding to pay for staff, then it wouldn't be appropriate for furlough to be paid on top. If you get an element of public funding, but it isn't necessarily to pay for staff, then it could be possible to furlough employees. In terms of calculating the £2,500, overtime will be included, but fees, bonuses, and commission are not included when it comes to working out salary. So we'll move on to the next slide, please. It may seem obvious who you're going to want to furlough. Simply, you're going to have a number of employees who just do not have work to provide to them. It may be the case that you have a pool of employees and you will only require some of them to do work. So the issue then is, how do you select those employees that you want to furlough and those that you want to keep on for the time being to carry on working? There is no sort of criteria set out in the guidance. It's not going to be like a sort of statutory redundancy process, but we would advise you following some objective selection process, even if it's very simple. What you must avoid doing, though, is relying on any protected characteristic when selecting somebody. But there will actually be a basis to positively discriminate. So you may need to shield certain employees because of their age, because of they're vulnerable due to pre-existing health conditions and so on. So actually saying to an employee who may be over 70, you are going to be furloughed, that would, strictly speaking, amount to age discrimination, but it would clearly be justified. So there wouldn't be any comeback on that. As I mentioned earlier, furloughing can be done, it's got to be done in blocks of 3 weeks. So what you could consider doing if you have a pool of employees is actually rotating them. So one group will be furloughed for 3 weeks whilst another group works, and then after the 3 weeks you swap them around, and that could be a fair way of doing it. Furloughing will amount to a variation of the contract of employment. So you will be reducing the employee's salary. That will amount to a fundamental breach, which would entitle the employee to resign and claim constructive unfair dismissal or unlawful deduction of wages. So it is important that you consult with the employee and try and reach consent with them. The reality is we're finding that everyone is understanding of the situation. I've not heard any stories yet of employees kicking back with regards to the furlough scheme. If they're a high earning employee, then obviously dropping down to the cap of 2,500 could be a significant drop. So it'll be up to you then possibly to negotiate a top up if that is feasible. In terms of cash flow, though, it's still down to the business to make the payment. You pay the employee in the normal way. The £2,500 would go through payroll, be subject to tax and national insurance deductions, and then you'll seek reimbursement from HMRC through an online portal. That, we are told, is expected to be up and running by the end of April. But who knows? I mean, clearly there's an awful lot going on. It's changing day by day, and there may well be a delay. And even if it is up and running by then, I should imagine it's going to be absolutely overwhelmed. So that is something to bear in mind. Once your employees have been furloughed, though, it's very important as well not to just forget about them. You know, there's a potential mental health issue going on. People could feel quite disillusioned. They're going to be stuck at home, potentially just, and if they're shielding, and it is possible for you to furlough employees who are shielding, then just keep in touch with them. Drop them a line maybe once a week, just to say hello, see how they're getting on. I think that's an important point to do. Also, if you actually made employees redundant but they were on the payroll as at the 28th of February, but have subsequently been made redundant, you are allowed to re-employ them and then furlough them if the reason for the redundancy was because of the coronavirus situation. Just move on now to a couple of questions and answers. So can employees be furloughed for any part of their working weeks? Well, as I said, no, the answer is no. It's got to be strict 3-week blocks. It does throw up an interesting question when it comes to holidays. Clearly, we've got Easter coming up, we've got bank holidays coming up. There is nothing in the guidance about it, but the line that we are taking is effectively that will not break furloughing. The issue then is, will the public holidays be deemed to be holiday? Because in most contracts of employment, public holidays are specified as annual leave. My view is that you should say you're furloughed, but that is holiday, and we're going to top up the 20% shortfall or whatever the shortfall is, so that you get your full pay whilst you're on holiday. In the same way that if somebody was off sick, receiving statutory sick pay, if they actually elected to take holiday whilst they were off sick, you'd be obliged to then pay them at their full rate of contractual pay. Then moving on to the next question. So in terms of calculating what does amount to 80% of the monthly wages. So if you have someone who's paid the same amount each month, that is fine. But if you have employees whose pay varies from month to month, then the HMRC guidance specifies that you should pay either the higher of what they earned in the same month 12 months ago, or the average of their earnings over the past 12 months. And if they haven't worked 12 months, then just you go back to when they commenced their employment and average their earnings there. And bear in mind that HMRC has reserved the right to come in and audit businesses to make sure that they haven't given salary increases or done anything else to abuse the system. I mean, the reality is that I think HMRC are going to be so overwhelmed that I can't imagine they're going to have a huge amount of resource to actually carry that out in practical terms. But undoubtedly there will be some auditing. Moving on to the next slide. The simple answer to that is yes, annual leave will continue to accrue during furlough. I mentioned the point about bank holidays and whether that breaks furlough. So ACAS has actually published guidance that suggests that it would break furloughing, but most employers, employment lawyers disagree with that. And we're a bit at a loss as to why ACAS have published that guidance, because it's not consistent with some existing case law to do with oil rig workers who have to take mandatory time off, and then what happens to them when they take a holiday during that time. Regulation 15.2 of the working time regulations actually allows an employer to force an employee to take annual leave at a certain time. The stipulation is that the employer must serve notice of the requirement to take annual leave that is at least 2 weeks longer than the period of annual leave to be taken. So, for example, if you wanted to require an employee to take 1 week's holiday, you'd have to serve 2 weeks' notice. It doesn't specify what form the notice should take, but the reality is that you would do it in writing so that you have a record of it. So it may well be the case that employers could ask that their employees take annual leave whilst furloughed. As I say, my advice would be then to top up the 20%, but it does mean then that you won't have employees that have got huge blocks of annual leave to take up once we come out of this situation. And the government, you may well have heard as well, has announced that 4 weeks annual leave from the current leave year can be carried forward into the next 2 leave years. So they will have an additional 2 years to take up to 4 weeks annual leave. Moving on to the next slide. Can employees be furloughed without their consent? Well, as I said, no. But in reality, I don't think there is going to be a huge amount that they could do. I mean, say that if they're going to resign and bring a claim for constructive unfair dismissal, then there'd be an argument that they've failed to mitigate their losses. The reality of the situation, to say, is that employees are agreeing to it anyway. So it's an academic point. And then moving on to the next slide, what happens if a furloughed employee develops COVID-19? Well, you should inform them to notify you that if they do become ill with COVID-19, with the coronavirus, whilst furloughed, they will then go on to statutory sick pay. They're entitled to that for 14 days. Businesses with fewer than 250 employees can now reclaim that back as well from the government. I suspect that, again, practically, if an employee is furloughed, they may well not inform you, because obviously they'll realise they will go from receiving 80% of their pay down to SSP. But strictly speaking, they should, and you should ask them to notify you. And then dealing with disputes about which staff should be furloughed. As I said, try and follow a relatively simple selection process. But it is important to try and keep the morale up amongst your staff. So if it is possible to rotate, if they would prefer to work, then try and do that and have them working in their blocks of 3 weeks on and off. And that is it in a nutshell. I've sort of tried to cover the most salient points. If you do have any questions, though, try and deal with them in the Q&As, or please feel free to contact me afterwards as well. Thank you. I'm now going to pass you over to Liz.
Lovely. Thanks very much, Damian, and lovely to virtually see you all this morning. I hope you're well. I'm going to talk about, if you click onto the next slide, Charlotte, for me, please. I'm going to talk about 3 key areas, really: the government deferral, the VAT deferral that's been announced, and also then reflect on how VAT processes have been affected generally as a result of the COVID-19 outbreak. And then finally think of things that you could be doing anyway to try and improve cash flow. I mean, VAT is one of those taxes that you can use to your advantage sometimes to minimise the amount that you have to pay and maximise the amount that you have to recover. And there's a broad mix of people who are listening to this, from universities to importers and exporters, as well as accountants who'll be advising their clients. So, think more broadly about the way in which the VAT can work for you and your clients. If you could click on, Charlotte, please. So if we just talk about the government VAT deferral. Now, the really important thing to recognise is that this is about a deferral for VAT payments that arise in this period, the 20th of March through to the 30th of June. We have to recognise that it doesn't actually cover duty deferment VAT payments at the moment, and that is a point that is being lobbied on. So it's specific at the moment to liabilities that arise under your VAT return submission. So we'll touch on later in on the slide as to which VAT quarters and systems that we're talking about. So it's been a payment that would have been paid in this period, and it will be deferred, so you don't have to pay it until the 31st of March next year. Originally, commenters were going, oh, it's to the end, to the tax year end. It's not, it's to the 31st of March. Now, I think you should actually be trying to think as to the logic of this. If you think about it, what you're saying is what's going on your VAT return in April and May, potentially, is going to be the amount of money that is deferred. So why not try and make that liability as large as possible? So your output tax as big as it can be, your input tax as small as it can be, because that way you're maximising the value of the deferral period. So if you've got input tax that you might be thinking, oh, well, I'll put that on my April return, or I'm being invoiced for it at that point. There's no actual rule that says you have to put it on that return. You can claim it when you want, effectively. So there is something that's about being a bit smarter about what are the figures going on there. Obviously, you can do nothing about the output liability. If you create an output liability in that tax period, it has to go on that VAT return. But equally, if you've got a continuous supply of services that you're working on for somebody, you might think about raising that invoice on the 1st of July or the 1st of June in the next VAT return quarter. So that liability falls in a different period. So think about the ways in which you can use this to maximise the value of the deferral benefit, obviously within the constraints of the law. As I say, it doesn't appear to cover import VAT under duty deferment accounts, but that is being lobbied for. The Institute of Import and Export have made a suggestion to the Treasury about basically bringing in postponed accounting, which is something that we're going to have when we Brexit, if indeed that happens, on the 1st of January next year. So they've put in suggestions as to a temporary deferral, or bringing it forward in terms of the use of postponed accounting. And if you haven't got a duty deferment account, perhaps the other suggestion is to automatically set up to give you a temporary deferment account, which again, that was something that was suggested under a hard Brexit. What was announced this week, and I'll just iterate the point that Paul's made about really making sure you keep up to speed with the changes, what was announced on Tuesday was there is going to be a specific duty and VAT relief announced on certain types of medical equipment and personal protective equipment that is being imported from outside the European Union. Obviously, we're still talking about this is applying to goods coming in from outside the EU, not within the EU. So do have a look at that. It is very specifically drafted and it relates to public bodies, but there is also an ability to apply to be an authorised non-state body to access this relief. So again, that is certainly something to be looking at under the universities side or any other organisation or charity that's listening in today. If there are some larger organisations I see on the list. I'm not sure if you're using the payments on account scheme, but that could be something where you would get an extra benefit from this window that they've set up to the 30th of June. And that's because we're talking about payments that are due in that period, and your May VAT sort of quarter, you will be making a payment on the 30th of June as part of the interim payments on account. So you may get an extra benefit on that payment being subject to the deferral, whereas somebody who's not on a payment account and just has to submit their May VAT return, they're not going to get that benefit. So as I say, there is a sort of slight difference there, an added benefit for larger organisations, but only if they're on the payment accounts and only if they've got a May VAT return cycle. The other thing this does not cover is something called the MOS payments, which are the mini one-stop shop payments. Now that's a very particular scheme that's only used by your organisations if you're in electronically supplied services to private individuals. So, you know, organisations that might be doing downloads of music or information or subscription to information to private individuals. So that's very specific. And as I say, it's not covered under this. So we're talking VAT return liabilities arising in this window. If you could click on for me, Charlotte, please. The really good thing about this deferral is you don't need to apply for it, but please, please, please do remember you actually have to cancel your direct debits. So no one's going to do this other than you. So please make sure you cancel the relevant direct debits that are going to crystallise payments in that period. This is not saying your VAT returns do not need to go in on time. That is really important that you don't let that slip. They are happy, that is they, HMRC, are happy that no penalties or interest will accrue on the late payment, but clearly if you are late in the submission of your VAT returns, that will still count as an issue. We're hearing nothing to suggest that repayment returns will be delayed. So if you're a business that's got more input tax than you've got output tax, perhaps you're an exporter, I know there's a number of exporters listening, you might be putting in monthly VAT returns in order to get your money back from the revenue. That's not going to be affected. That's still going to go on as normal. So the returns, the normal VAT returns for businesses that are just submitted, not payment account basis, but just normal VAT returns, could be February, but if you've already paid that, obviously before the 20th of March, you're out, you can't do anything with that, you can't claw that back. So you're looking at the VAT returns that cover the quarter ends of March and April, but as I say, not May. And the reason for that is, if you've got a May VAT return, you've got 1 month to put that together, so that's the end of June, but the actual payment date is deferred normally 7 days. So it's the 7th of July that the liability would arise. The 7th of July is after the 30th of June. So that return will not qualify, which, as I say, is where it's different from a payments on account business, because they will have a May return and they will be obliged to make a part payment, a monthly payment on the 30th of June. So that part payment will qualify for deferral. So a slight difference. We have made these policy issues and difficulties for business. We've made the Chamber of Commerce in London aware of these factors as to how they're practically affecting business. So the Chamber is lobbying and passing this information through at the highest level. Charlotte, could you click on, please? So the VAT processes, so that's the deferral scheme. But what about the VAT processes? Well, life does continue as normal. Another bit of good news, however, You'll all be familiar with the hassle that making VAT digital is creating in the business area. We've all been now putting our VAT returns into the revenue online, but there was a second stage, which was we had to make sure all of our internal VAT accounting processes went through digital steps. And that was due for implementation, had to be done by the 1st of April of this year, or October if you had a 6-month deferral. It was announced on Tuesday that there is a wholesale deferral of that requirement to the 1st of April of 2021. So that is good news. Still have to do it eventually, but we've got a bit of breathing space because it is a bit of a challenge to make sure all your processes do go through digital steps. The VAT tribunal system, where physical hearings would have been booked if you've got an assessment that you're in dispute with the revenue, or you've got a 0 rating certificate that they're refusing to accept. You know, those have been stalled at the moment. They might be undertaken through a digital means by email or virtual meetings. So that could be both good or bad news, depending on you know, if you're waiting for some money back because you think you're going to win. That's going to be a bit of a delay. Some other good news, because I do try to get some good news out there. If you have submitted a return for a repayment, and perhaps it looks a bit out of kilter from what the revenue would normally expect from your organisation, they have the ability to set a repayment inhibit on paying you back that until they've checked that with you. They might call you and say, can you send me a couple of the big invoices, or can you explain why this is like it is? What we are seeing at Centurion is that they are releasing those repayment inhibits and basically saying, here you are, yeah, we'll process the return, you can have the money back, but they are doing that on a without prejudice basis. So that's effectively like saying, we have the right to check later, just to make sure this is right. So good news, but make sure, you know, you're aware they might come back on this. Now, there is a specific time to pay hotline, coronavirus helpline, and I've put the details of that on the next slide. Now, so if you are in difficulties and you have a liability and want to discuss a time to pay arrangement, we are hearing that helpline is being used. Liabilities and time to pay agreements up to 100,000, anecdotally we've been told, are being cleared by that. So if you click onto the next slide for me, Charlotte, you can see there the telephone number for any organisation out there that is looking at their VAT liabilities and saying, you know, outside of this deferral period, you know, I'd had historic deferral issues, debts I was struggling to pay, you know, have that conversation with them in order to see whether you can get a time to pay agreement, just to give your business or your charity a bit more of a breathing space. So moving on then, please, Charlotte. So what can we do? Usual, Liz, let's make the best of this. Cash flow. Outside of the deferral, there are things that you can be doing. So there might be, perhaps you're a small business, or perhaps you're an accountant advising smaller businesses, you know, look at whether the normal accounting schemes that are out there can be used to help them. You know, the cash accounting scheme, that means that they're not exposed to bad debts arising. The annual accounting scheme, that might save them time and money in terms of having to submit a return once at the end of the year. You've still got payments to make in the interim, but you know, everything is worth looking at in this regard. And then over and above that, then is what I call the sensible steps. You're making sure that you're using the existing VAT legislation. This isn't about schemes or scams. This is about the best use of the existing legislation. So for example, if you're an organisation that accounts for VAT on the basis of the invoices you've raised to your customers, then you are obviously paying that VAT over to the revenue before you've got paid by your customer. So keep an eye on that, because if it goes over 6 months wait plus the credit period, you should be making a bad debt relief claim, reducing the liability of the output tax you've already paid to the revenue. Again, needs some management, but it's a lump sum that could be there. What about looking through your purchase ledgers? There's a very, I know it's a small amount, but there's a small amount of VAT that can be claimed from within mileage expenses. It relates to the petrol element, and you've got to have the VAT invoice, the petrol receipt from your staff. But, you know, if you've got that information, is that something that you could look at either on a going forward basis, or remember, you can go back 4 years to accumulate VAT that you have missed and claim that back from the revenue. They can go back 4 years and assess you as well. But in terms of extra boost to your input tax recovery, is there something in there you've missed that you are entitled to? And to date, you've been going, oh, it's a bit of a faff, I won't bother, it's only a couple of £100 a year. Well, actually, over 4 years, that could be a couple of £1,000. So it's worth doing. And this is specifically true for those of you who've got charity status. Now, there's some universities, there's some housing associations listening into this, and there's accountants who may be acting for charities. The charity reliefs for VAT are limited, but they are there. And it's certainly something we're actively doing with our charities, is going and doing what we call nominal ledger reviews and seeing what zero rating or reduced rate reliefs that we can get. As I say, multiplied by, we've got 4 years we can look at. The other thing I would encourage on that is those reliefs are because you go back to the original supplier and get a VAT credit note from them. If those businesses have gone kaput in the interim period, there's nothing to do about this. So it is an area that I would put quite high on the list if you're in a charitable environment and can access these reliefs, just in case the person who could give you that relief actually isn't going to be in existence in 6-9 months' time. So have a think about that. And then finally, there are the more complicated things. I mean, Centurion deals in complicated VAT. That's what we're here for. But, you know, these are things that, you know, the finance directors should be putting on the list in terms of, have you got the best corporate structure? Should I be looking at VAT grouping to avoid charging, you know, different companies VAT? If you're in an exempt environment, which certainly housing associations will be, financial institutions, health providers, you know, all of those that provide exempt services, the charity sector's included in there as well. If you've got a partial exemption method, which is simply, how do I work out how much do I allocate to recover? If you've had that in place for a long time, have a look at it again, see if you can sort out a better method. Are there things that you could do differently? In housing associations, for example, we might look at setting up a development company outside of their VAT structure. We might look at the way in which capital goods scheme works in partial exemption. So from the words I'm using alone, you can get a sense this is a bit more complicated, but these can make sizable monetary differences to you. And then the final point, because as I say, I know there's some importers and exporters there, have a look at, well, okay, I'm not using duty deferment, but actually it would give me a bit of cash flow advantage. The SEVA, the simplified import VAT side, has got lower bonds attached to it as well. So, you know, perhaps look at the ways in which you should be using duty deferment. Are there any inward processing reliefs that you can take advantage of because you're bringing goods in, doing something with them, and then sending them back out to the country as well? So can we defer and you know, suspend VAT in that way? So those were just a couple of ideas, really, just to make the best of the situation. We are all in this together, but from the VAT perspective, there's certainly some ideas there. Charlotte, could you just click on? You've got the details of the team there. We advise on VAT as well as on environmental taxes. So landfill tax, climate change levy, anything to do with waters and utilities. That's an area that we've added to our portfolio. In the current environment, if it's difficult to, because we are all, except for Liz, remote working, use our email us address if you don't have an existing contact, because all the technical team will see that. But I do hope that there was some clarity as to what the deferral applies to, and some ideas in there as well to help make the best of what we're in. Thanks, everybody. I'm now going to hand you over to Harri Lloyd Davies, who's going to deal with what we're all interested in, which is there something out there we can take advantage of on the grants? So over to you, Harri.
Fantastic. Thank you, Liz. And good morning, everyone. As Liz has said, I'm not going to touch on the furloughing or the VAT. I'm going to focus on hopefully all the other support that is currently available to you. I'm not going to go through every single, there is some specific support for certain sectors. I haven't got time to go through all of that today. So have a look on the Chamber website or the gov.uk website, or go to your trade body. They have more information on your specific sector. But what we're going to do is I'm going to look at the more general information that's available. So that screen captures the main support at the moment. So we're going to be looking at the new grants that are going to be coming out in Wales, talking about rates relief holidays, the smaller grants which are already arriving with some smaller businesses and how those are working. I then want to touch on the other side of it, which is the debt finance, and in particular look at the Corona Business Interruption Loan Scheme, or CBILS as it's become known, and then touch on, I'm going to spend a bit of time on Development Bank of Wales loan support, because that's new this week, and I'll go on a bit more about that for reasons you'll see in a moment, and then finally just touch on some of those other supports that are available. So we're going to start off on the next slide with the Welsh Government grants. These aren't available yet, so there's something which will come out, we believe, in the next week or so. But the principles, the headlines are that it's grants of £10,000 for micro businesses employing up to 9 people, 100,000 for 10 to 249, and then larger grants and other support for bigger companies with more than 250 employees. As I say, the application forms of those will be available next week, but I did pick up on the press release a little bit of the small print, which is you're going to have to be employing staff. You've got to be VAT registered, which I know has knocked out some of our smaller clients who are hoping to get some grant aid. And the last one, which I think will be the difficult one, which is you have to be able to show how your turnover has been affected by the coronavirus pandemic. And the big questions that I suppose we're waiting to have answered, well, how much has it got to be affected to qualify? And then sometimes it's not the easiest thing to prove. So what evidence are you going to have to supply to demonstrate that? But hopefully we'll have more questions on all of that next week. The next slide we're now going to look at is the business rates relief and the grants in Wales. Good news for anyone who's a retail, leisure or hospitality business. From now on, you are not paying rates for the next 12 months. So you have got no rates to pay for 2020 to 2021. There was a little bit of clarity. I think that if you've got a rateable value property in those sectors with over £500,000, that's your rateable value, you do not qualify, but there's only 200 or 300 of those in Wales. So the vast majority of businesses in those sectors have got a year off business rates. More importantly, and probably the most important thing I want to say today, is the grants for those smaller businesses. So if you are in retail, leisure or hospitality and you've got a rateable value of between £12,000 and £51,000, you should have, if you've not already received it, you are getting a grant of £25,000. For smaller businesses, rateable value of under £12,000, and that is in all sectors, not just in those 3 particularly badly affected ones, you get a £10,000 grant. But what we're seeing is a lot of people are thinking, I've just sit there and wait for the money to come to us. We believe that's correct. But I strongly urge you, if you haven't already applied for these grants and haven't had your money, go online and apply for them, because the people who've had it, and lots of this money has already arrived with our customers, but it's the ones who actually got ahead of it and actually applied for it. So if you haven't applied, I strongly recommend, as soon as this webinar finishes, go onto your local authority website and apply for that funding. And particularly for the smaller ones, they probably don't have your bank details because you don't actually pay anything to them. So it's really important you give them your bank details to get your money back. Just one other quick thing to be aware of is that if you've got multiple properties, you can claim the grants multiple times. So I think there's a limit of 2 per local authority area, but if you've got 4 or 5 premises in 4 or 5 different local authorities, as far as I'm aware, you can claim that grant multiple times. And I'm certainly aware of businesses that have had more than 1 grant. So make sure you maximize your grant as well as getting the first one. We're now going to move on to the next slide, where we're going to talk about the debt that is out there. And I'm going to start with the Coronavirus Business Interruption Loan Scheme. The headlines of it, you've got to be turning over less than 45 million, and it is for businesses. The loans are up to £5 million. It's having pretty bad press. This was something that was announced by the Chancellor in his budget, which was only last month, although that feels like a very long time ago now. But it launched last Monday, and so far, I think I read that overnight they've had 130,000 applications, and less than 1,000 businesses have actually had any money. And the problems we're seeing is the banks are swamped and somewhat overwhelmed. The process is very complicated, and we've certainly had a number of customers who've been turned down because basically they qualified for normal debt finance. So you've got to be rejected for a normal loan before you can qualify for this scheme. And a lot of people complaining that it's interest free for the first year, which is great, but then very high interest rates in years 2 onwards, and also lots of personal guarantees being asked for. So that is a scheme that doesn't appear to be working particularly well. there was announcements very late last night that they're now banning banks from asking for personal guarantees, and we understand they're relaxing the rules about having to be turned down for standard commercial finance first. But it's going to be interesting to see whether that actually works in practice over the next few days. One other thing that was announced last night, there was a big gap essentially. There was a scheme in place for very large businesses, a scheme for ones turning over under 45 million, but there was a gap in the middle, and they've also announced that they're going to bring out a new scheme for the businesses that turn over 45 million, I think up to 500 million. So if you fall into that category, there is further support for you on the way. We're now going to move on to the Development Bank of Wales on the next slides offering. Welsh Government have put a fairly big comprehensive package out there, and included in that is they've put £100 million through the Development Bank of Wales, or DBW, to fund additional loans. Those loans are now live and looking for applications this week. The link on the page there is how you find out. It takes you directly to the page where you can apply. But the headlines are, these loans are between £5,000 and £250,000. You pay nothing, not interest or capital, for the first 12 months. And then across the 6 years of the loan, it's just 2%. So a relatively cheap interest rate, certainly compared to some of those CBILS loans. No arrangement or monitoring fees. And they're open and accepting applications now. And on the next slide, I'm just going to touch on the information that they require. And the critical thing is it's an online application form. I don't think you can ring them up. I think they only want you to apply online. But I had a quick look at the form. I think 10 to 15 minutes and you'll probably have it done. And the bit I really like about these loans is how limited the information you'll be required to provide is. So, for the smaller loans there, all you've got to do is fill in the form and give them 3 months of bank statements. And for the bigger loans over £100,000, you've got to give them a bit more in terms of management accounts and historic accounts. But there's a cash flow template on their website, and that template is relatively straightforward. I think it's a couple of hours work, certainly not a few days. So, I think if you're really struggling financially at the moment, you're desperate for cash, my strong advice is, rather than go to the CBILS loans, I would start with Development Bank of Wales. A couple of points, you can apply for both. So my advice is go for the Development Bank of Wales loan first and then apply for CBILS if you still need it. And the only point to be aware of for both of them is that they are only really for businesses in genuine need. So if you're sat here thinking, I've got to worry that if this carries on, I might get a bit tight towards the end of the summer, they're probably not going to give you a loan under either scheme. These are for businesses who are really running up against cash flow problems in the next month or two. So as I say, a really great scheme that Development Bank of Wales have come forward with, and I'd highly recommend you look at it if you're really struggling. So just to finish on the next slide then, I'm just going to run through very quickly the last little bits of support available. Liz has mentioned VAT deferral, but lots of businesses have other taxes that they struggle to pay, particularly at the moment, like corporation tax and PAYE. You will find the revenue are far more willing to talk about deferral than they have been historically. So if you're struggling to pay any of the taxes, give the revenue a ring. You've got a very good chance that they will come to some arrangement to give you a little bit more time to pay. And then on the next slide, I just wanted to touch briefly on the self-employed support. This was something that was announced the end of last week by the Chancellor. So on top of the furloughing support that's available to employees, if you are self-employed, you can now claim potentially, if you've been very badly affected by the virus outbreak, some of your some money back. This money is not going to arrive until June, July time in reality, and it's only going to apply if your profits in previous years were under 50,000 and you earned less or over half your income from self-employment. A lot more detail we need before we can get the absolute final figures on this. But if you are self-employed, it's something that hopefully will come to assist you. What it doesn't do, and there's still a bit of a gap, which is there are very many people who think of themselves as self-employed, but work through a limited company. So if you're a one-man band limited company taking your income out as salary and dividends, this scheme does not support you. And I think at the moment, probably, and maybe Damian will mention something about this in the questions and answers, all you can probably do is to put yourself onto furlough, assuming you have zero work, and hope that that scheme will apply to directors of one-man band companies when the final detail is released. The one final thing I just wanted to mention very quickly was statutory sick pay. So the government abolished refunding statutory sick pay to companies a couple of years ago, but they have announced that through this period you can reclaim the first 2 weeks of statutory sick pay that you pay to your employees. Again, I don't think there's any details on that have come out as yet, unless there's something I missed overnight. But that will be another support source of income coming back into you in the weeks ahead when we know how to claim it. So just a very quick summary to finish. As I say, my key takeaways today in terms of support is if you haven't applied, if you're a small business eligible for the 10 or 25,000 pound grant and you haven't applied, that to me is your number one priority today. And then number two, go to the Development Bank of Wales loan if you can, if you're eligible and you really need the money. And then I would apply finally for the CBILS loan. And lastly, just keep an eye out next week for the Welsh Government announcements on further grant support in case those apply to you. So that's me finished. Thank you very much. If you've got any questions, either go to the Bevan Buckland website or the South Wales Chamber website, or get in touch with me directly. And I'll now hand back to Heather and Paul.
Super. Thank you, Harry. Thank you, Damian. Thank you, Liz. Wow, I've learned a lot. Damian, can I field the first question to you, please? Absolutely inundated with questions at this end, both online and on the panel itself. I'm going to give you a three-parter, if I may. Can I place an employee on furlough if they're already on long-term sick? Part one. Part two, what happens if my SSP is higher than the current government offer of SSP or the current level of furlough? And three, if my employee is a partner of somebody who works in the NHS or an essential worker, can I put them on furlough so that they can look after the family?
Okay, so part one, if an employee is on sick, they cannot be furloughed. That is the long and short of that. Part two, if contractual sick pay is higher than SSP or furloughing, it is a contractual arrangement between the employer and the employee. So in the same way that it's necessary to get consent to furlough, it'll be necessary for the employer to try and reach an agreement with the employee in respect of what they're going to be paid for company sick pay, so whether they can vary the terms of the contract of employment. Given that it's not possible to furlough employees whilst they're sick, then it may well be that the employer is going to be stuck paying the higher contractual sick pay. And in terms of the final part, it is clear that shielding employees, well, I say it's clear, the guidance suggests that shielding employees can be furloughed, but that is because they're shielding because of their own condition or situation. It's less clear cut if they have relatives who could be affected, and therefore they're shielding because of their relatives. My gut feeling is that yes, they probably could be furloughed, because I mean, ultimately, it's not difficult for an employer to justify furloughing somebody. I mean, they can simply just say, we don't have the work for you, therefore we're going to furlough you. So that should be relatively straightforward to do.
Thank you, Damian. Next question, we've got lots of questions on furloughing coming in on the Q&A. I've sort of bundled a few together, but one of the clarifications that businesses are seeking is what can furloughed employees actually do whilst they're being furloughed? Is there the opportunity for them to do a small amount of work, no amount of work, and what's the guidance for employees with furloughed staff?
Okay, so an employee who is furloughed cannot do any work for their employer. They are allowed to do volunteering, and they're allowed to do training. They can also do work, if they have a separate job with a different employer, they can still be free to do that. One of the questions I've had is, well, can we have a care home, can our employees be furloughed, then work as volunteers in our care home? And the answer is, well, if they are doing something within an organisation that you as a business make money from, then no. So they could not volunteer in a care home that is owned by your business. If an employee has to do training that is mandatory whilst furloughed, then that will count as work for which they need to be paid. So if they're on national minimum wage, they're then furloughed, so they drop below the national minimum wage because it's 80%. That is fine if they're not working, but if they are then deemed to be working through doing training, you will need to top it up to the national minimum wage. So I hope that answers that.
Thanks, Damian. That's great. Liz, can I turn to you, please? Couple of questions around VAT. Again, it's a three-parter, sorry. Why has postponed accounting for import VAT not been introduced post-COVID? Secondly, what can I do in respect of getting funds from HMD? So the gap that exists between paying my staff and getting paid or refunded by HMRC. And are there any negative impacts to the business in respect of VAT deferral? Sorry, Liz, you're on mute.
It's not often I'm quiet, is it? In terms of the middle question on the delay on staff pay, I think that's probably something that would sit within the generality of sort of questions. It's not something I've got any knowledge of as to any grant payments. That might be something that Damian could answer. But in terms of the why haven't they brought in postponed accounting, that's a very good question, and that's a question that's been asked of them. As I say, the Institute of Export have lobbied them this week and have specifically asked for an earlier introduction of postponed accounting. For those of you not familiar with postponed accounting, it's something that is going to come in post December with the hard sort of Brexit situation that we're in. And it will mean that you don't have to pay VAT at the point of the goods coming into the UK. You will pay that VAT through your VAT return. So there isn't going to be a time lag between paying it at the duty deferment or at the port and you being able to recover it back as input tax on your VAT return. So it's a very good question, and it is being lobbied for, and the Chamber is certainly lobbying for it as well. I'm aware of that because it's a discussion we've had at policy level. So watch that space. That hopefully might be something else that comes into play. Some other things that I just would flag up for those organisations, if you are an organisation that's involved in producing goods and you're donating them on to an NHS trust, you know, we've seen some brilliant examples of commercial organisations and the university sector making PPE equipment and donating it on. Unfortunately, there's a VAT issue that's sort of arising on that because those items are technically gifts. You can only gift over £50 to a particular individual in a year without having to account for VAT on that. So I've raised this again as a policy point centrally in London that Adam Marshall will be taking forward. And we've certainly raised it through our clients with HMRC to see, you know, this doesn't seem fair morally or in any sense. So there are issues falling out of this all the time. In terms of, are there any negative implications for, was it the duty deferral? Or no, negative impact of the VAT deferral. I suppose the main negative is you have eventually got to pay it. So there's this balance between using cash flow as working capital and then recognising that come the 31st of March, you will still have to pay it. So it's going to be this issue as to chicken and egg. It's like I was mentioning, if you make the liability justifiably as large as you can in this period to access that deferral, you are only putting off something that you will have to pay at a later date. So, but that's a common theme, I have to say, with VAT. It's mixing it up that technically it's not your money that you're collecting, but in this time, unfortunately, it's going to be the working capital a lot of businesses rely on. So I think that's probably going to be the main negative impact of the deferral.
Thanks for that, Liz. Conscious that we are running over time, there's a lot of questions, a lot of interaction. We're happy to keep going for about another 5-10 minutes. My next question again is around furlough, which is going to Damian. Perhaps you could just take us a bit through the furlough paperwork, which there's a number of questions coming on. What's the paperwork that I should be submitting to my employees to let them know that I will need to furlough them?
Basically, you just need to get their consent. I mean, that can be done verbally or in writing, but best practice is always to have things done in writing so you have a paper trail. And simply, it would be a letter confirming that you're going to be furloughed with effect from the date. You obviously, you can't claim retrospectively. So furloughing started with effect from the 1st of March. You can't furlough somebody now and then try and claim back to the 1st of March. And the letter should then explain how furloughing works so that it's going to be in blocks of 3 weeks. You may not know when it's going to end at the moment. It could be that the government will withdraw the scheme after 3 months. They've said that it's going to run until the end of May, but they will extend it if necessary. But obviously, it's a moving feast. You should explain that they have the right to do training or volunteering, but they can't do any work for you whilst furloughed. And you should also confirm whether you're going to top up the 20% or not. And then in terms of actually claiming, I'm just looking at the government guidance now. So when the portal opens at the end of April, hopefully, to claim, you will need your PAYE reference number, the number of employees being furloughed, the claim period, so the start and end date, the amount claimed per the minimum length of furloughing of 3 weeks, your bank account number and sort code, your contact name, your phone number. And it says you will need to calculate the amount you are claiming. HMRC will retain the right to retrospectively audit all aspects of your claim. So that's the information you're going to have to provide, and that is on the government guidance if you Google that.
Super, thank you, Damian. Harri, can I just come back to you, please? Access to the grants potentially from the Economic Resilience Fund, how can that take place?
Well, we don't know yet because it's not available yet, but we believe the middle of next week there'll be an online application form, and that will, I assume, come out via the Welsh Government website. I'm sure once we've got it, we will put it on front and centre on the Chamber website and send it out through the Chamber communication channels as well. So keep an eye out for it, but we're hoping that will become available in the middle of next week. But what we don't really know yet is the full details of who is eligible to claim it.
Thanks, Harri. Another question for you as well, if I may. For small businesses who have lost income, they would otherwise go into liquidation. Have you got any advice in terms of what we can do in terms of the directors and what practices we can look at there to help them?
Yeah, small businesses are often the ones who are, at the moment, I see falling through the cracks. So we've got a lot of customers who don't have commercial premises. They work from home. They're limited companies, so they don't have, they're not going to qualify for the self-employed income, and they're taking out relatively small salaries. So whilst they may get some furlough payments as directors, they're not going to be huge amounts. So those are the sort of businesses that I think probably are most in need of either looking to someone like the Development Bank of Wales for some loan finance just to get through, or to look at those new grants when they come available next week to see if any of those work for them. But certainly, I've seen a lot of individuals who've those who've got ill have claimed statutory sick pay, but a large number of them now are looking at universal credit as their only way of actually getting any money to themselves over the next few weeks. So I'm aware of a number of directors who've decided to apply for universal credit in the short term, because that's unfortunately for many people the only support that's currently available.
Super, thank you, Harri. Damian, can I just come back to you, please? lots of detail questions here, and I'm just going to bundle a whole load of them at you, and you can just run through them. You may have covered some of this already, but just to reinforce the message. Do people need to consider shift premiums in respect of furlough calculation? Do people need to consider minimum wage increase in respect of furlough calculation, which obviously kicked in on the 1st of April? How do they treat holidays? How do they treat bank holidays? And if I'm in a situation where I would like to rotate my staff, but I don't have enough staff to rotate, or the skill sets are in the wrong place, how do I deal with that?
Okay, shift premiums, I would say they should be taken into account, because the guidance suggests that overtime can be taken into account when calculating salary, but commission and bonuses are not taken into account. So I would say yes, include the shift premiums. Minimum wage increase for national minimum wage. Well, as I said previously, when an employee is not working, when they're furloughed, the national minimum wage is not going to apply. So strictly speaking, you probably won't have to take it into account at the moment. Once we get into, if you get into a new block, then probably you will. So it'll be 80% then of whatever the national minimum wage rate will be, with effect from the 6th of April. If you have employees on the national minimum wage. But the fact they may be receiving less than that through the 80% scheme will not be an issue, as long as, I said, they're not doing paid training. Holidays and bank holidays, it is not clear cut. So the guidance says that furloughs have to be 3-week uninterrupted blocks. But we're now going through a period where we're going to have bank holidays with the Easter break. It's going to be a logistical nightmare for employers, for HMRC, if the 3-week blocks get broken up by that. So I think pragmatically, they will just be included within the 3-week furloughing period. The issue then, though, is whether those days are going to be treated as holiday, and if they are, my view is that they should be topped up to the full rate of pay. And I suspect the position on that will become clearer in time. I mean, clearly this legislation has been put through incredibly quickly, and there are just so many permutations that have only become apparent with hindsight. And in terms of rotating staff, what was the specific point with rotating staff?
If I have either insufficient staff or I've got the skill sets in the wrong place, so I may have rotated some skill set out, but I actually need it in work.
Well, if you've got insufficient staff, I mean, you clearly can't rotate. So you just either have to decide to keep the staff that you've got to continue working if there is work there available for them, or you furlough them. If you have furloughed the skill set out, then you're going to have to decide whether you break the 3-week block and bring them back in. But if you break it early, then you probably won't get any pay for the period of time that they were furloughed. Or you just ride it out for the 3 weeks and then bring them in at the end of the 3 weeks and then furlough the staff that don't have the skill set.
Okay, super. Thanks, Damian. So many questions here. We've tried to touch on as many as we can. I'm going to ask Heather just to close this out right now. But one thing that Charlotte did remind me of in the early hours of this morning in preparation for this is that as you leave, there's a short survey. Please complete that survey on the way out, because it actually tells us what it is you need to know. And we will be organizing these relevant, valuable webinars to help you through this next process. So please complete that survey. And it's goodbye from me.
Thank you, Paul. Well, a lot of engagement from you. Thank you so much for submitting your Q&As. Hopefully we've got through most of them. We've covered a lot in over an hour. We've overrun, and I'm sure we all probably need to go and have a cup of tea now. Thank you so much to Damian, to Liz, to Harri for helping this session, providing the insight and clarity. For those of you watching at home, thank you so much for attending and for submitting your questions. If we didn't answer any of your specific questions, I apologise, but the experts here are available should you need to get in contact with them, and we can help you do that. We have recorded this session so that if there's something you didn't quite catch and you want to go back over it, you'll be able to pick that up on the recording, and the slide deck will be available if you want it. You can email us so we can get that to you. As we mentioned earlier, this is not formal advice. Things are changing really rapidly, as you all know. So the advice that has been given today is current as of today, but I do urge you to keep checking back on the Chamber's coronavirus hub, because that's where all the up-to-date information will be. Charlotte will kill me if I don't mention that we have another webinar at 10 o'clock on Tuesday. That webinar will be called COVID-19 Key Decisions that you need to make in a time of crisis, and we'll discuss the key decisions that you're facing currently and how to make those decisions in the right order. So keep another weather eye on our website for new webinars. From myself and from all the panel today, thank you so much for joining us, and we look to see you again on Tuesday. Thank you very much. Goodbye. Hey.